this is far more valuable, to me than just to read some statistics in the media. So I want to bring up Mr. Ofir Levy, the head of the Phoenix team. Ofir.
Thank you very much for coming out on a Saturday, especially an important Saturday, to discuss the Phoenix real estate market. My name is Ofir Levy. I'm a broker in the Phoenix area. I've got a brokerage that handles transactions, acquisitions, dispositions, property management, and maintenance as well. So we're basically all rolled into one. My goal here today is to kind of let you know on pretty insightful things about the Phoenix real estate market. I'm a very analytical type of person, so you won't be seeing me pitch particular properties to you today or anything like that. It's a very dynamic market in Phoenix today. Things that are good, that go up for sale today, will be sold by tomorrow or the following day. So instead, I figured I'd give you some very insightful info. Hopefully you'll like what you see and you'll decide to contact me and purchase some property. Something you probably have never heard about before within Phoenix is that we have many cacti in Phoenix. I know it comes as a big shock to you, but believe it or not, we do. We've also got some beautiful sunsets as well. But realistically, why we're all here today is to discuss real estate. And what Phoenix does have is the #1 appreciating real estate market in the United States. And it's not even close, actually. It's a good 5% above any other major competitor with a substantial population. This is a recent article that came out in the Phoenix Business Journal basically saying what I just said, 19.9%, easily the largest percentage gain in the US. And again, this is a very conservative estimate. Michael Orr is the gentleman that Adiel was speaking about earlier. He runs the ASU Research Real Estate Department, and he's got even more numbers that show even higher appreciation. I always, under promise and over deliver basically. So I went with the lowest estimate that I could out there. And a lot of these charts that you'll see today are actually from Michael Orr as well. He runs a consulting business outside. But this is where it's at. 20% gain in just over a year basically. Again, conservatively, going from 80 to over $96 a square foot. And it's about time, because at the peak we were close to $200 a square foot. So I think we finally hit the bottom. Pending foreclosures are at a 4-year low. That's what those 4 lines there disseminate, is the past 4 years. You can see they're down 60%. We're running out of foreclosed homes, especially now that people are starting to see that values are going up. Most of the people that have decided to walk away from their house simply because of negative equity have already done so. In Phoenix, it's very much in vogue to walk away from your house. And so it was no big deal to walk away, rent a house down the street, pay a lot less than you were paying for the mortgage, kids get to stay in the same school. It wasn't frowned upon. I've been up to other parts of the nation where people generally don't let anybody know that they're having issues with their house. Where in Phoenix 2-3 years ago, people say, I haven't paid my mortgage in a year, and they'd have a smile on their face. So that's gone, and you can see that. That was basically the top line there in 2009. 2010 and 11, we saw the drop-offs, and well, the foreclosures are going away, at least a substantial amount of them. Inventory still remains low in the Phoenix market. Currently, we're still under 3 months. If you look at the red line towards the top at 6 months, that's a balanced market for Phoenix. So we have half of the supply that we can handle. It is a seller's market, not a buyer's market, from a straight statistical analysis of inventory. However, it's very much a buyer's market when you consider today's prices and the potential for appreciation. So after I told you, well, prices have gone up 20%. I generally get the question, am I late to the party? Is it too late? Did I miss out? Oh no, maybe I should look at another market because, I missed your 20%. And typically it takes 5 years, let's say, for a real estate market to appreciate 20%. Answer to that is no, the party's just getting started. And the reason I say that is I'll go back to this chart, which is a very micro view of what's happened over the last year to real estate values. And then I'll return to this macro view instead, which shows the opportunity, the potential in our market. Sure, we were oversold in 2006, we were overpriced. Nobody's arguing that. $198 a square foot on average. But today, even after the 20% increase, we're at $96 a square foot on average. To me, the downside exposure is greatly mitigated here. The upside potential is very obvious. We've taken a couple dips towards the bottom there, and a lot of private equity groups are stepping in with a substantial amount of capital to deploy in this market because they feel very certain about investing right now in this market. And I'm not a big fan of reinventing the wheel. If Walmart or Home Depot puts up a store, I usually think it's a decent area to buy a house next to. Same with private equity. They are spending billions of dollars. They're doing research into every single market. I don't have a problem following them. So just to keep things in perspective, back in 2006, what that chart just shows is that we were $198 a foot, and now we're at $96, even after a 20% run-up. This was in 2006, the $198. As a barometer, I guess, or a way to kind of look at it and give it some perspective, in 2006 we were paying, national average of course, $2.36 a gallon for gas. Today we're paying $3.78, and I saw what you pay here. It's nowhere near that. I'm sure you'll take $3.78 all day. But the point of this that I'm trying to make here is that since 2006, the nation's become accustomed to paying 60% more in gas, something that most everyone uses. Yet we have a 50% decrease in the Phoenix real estate market, and some people are apprehensive because of a little 20% uptick. So if we're used to paying 60% more now for gas, why is housing overpriced when it's gone down 50% over the same amount of time? I would challenge you to say that it's not overpriced. It's extremely affordable. So this is something I've used in the past, why the smart money is still investing in Arizona real estate. And we've got an increasing population. That's something you'll always need. That's the demand. That's the service that we're providing. These rental homes are in demand. People need them. There's still a lack of qualifying borrowers and credits. Many people that have gone through foreclosures are still unable to get loans. Many people are still on the sidelines because it's a substantial investment for them, and they're not investors. They could just be looking for a house for themselves. Maybe they're uncertain about their job, so they're not ready to take the plunge. You know, it's easy to say buy low and sell high, but it's harder to do. And so many of them are still on the sidelines. What that creates is a substantial demand for residential rental properties. And we as investors can acquire these assets and fill that gap while providing a service and helping people out with providing them a home for their family as well. It's truly a win-win situation. This is something that I believe shows kind of the health of the real estate market. You should look at every market and you should ask for these type of questions. In Phoenix, the top line there shows traditional sales. This is how much healthier our market has gotten over the past few years. We now have less than, I guess it's 15% of the sales in our market that are bank owned. You can see that the short sale, which is the line in the middle, is ticking up a little bit, but that's actually a good thing. The banks have wisened up and they've realized, let's work with these people that are upside down with their mortgages before it becomes a bank-owned asset. But truly what's very, very impressive here is when Phoenix was the poster child of foreclosures and the worst place to invest and all that other good stuff that we used to hear, now you can see that over half the market are completely normal sales, which is why we're seeing a ramp up, which is why we're seeing people pursuing assets right now, because it is a great time to acquire. And so let's just talk about the overall health of the economy, not just in real estate. Maricopa County is the 4th most populated county in the entire U.S. Again, this goes back to the fact that we have an increasing population, and we're already very large to begin with as well. Obviously, tenants need a job to pay rent. This is a chart of unemployment. Shows Arizona being number 2. Some of the other markets mentioned there are ones you may be considering. When it also comes to projected future population increase, again, Arizona number 2 with 108, just behind Glenn in Nevada there with 114%. And that's the percent change in population estimated by 2030. Take a look at the last one there, 29% for the US. So if the US is going to increase population by 29%, but Arizona is going to go up by 108%, to me that obviously shows that there's a shift within people occupying areas in the US. And we've seen that a lot. A lot of people are heading further south, the Sun Belt states as they call it, or the Rust Belt, whatever you will. So there's a disproportionate amount of people that are already here in the US that are moving to areas such as Nevada and Arizona. I call Arizona the Silicon Desert. It's not me, I didn't coin it. I wish I could take claim for that, but as you can see, we have many high-tech employers. In fact, this is more of a larger map of the Phoenix area that'll show you many of the high-tech employers there. And why I mention high-tech? First, it's very popular in this area. Secondly, it's been largely recession-proof. Now, I'm not an expert in high-tech, so I could be wrong. Don't throw anything at me, please. But I've seen, you know, some of the high-tech companies continue to be successful throughout this downturn in the economy because they play on the world stage. They don't play just within the U.S. economy, of course. Some recent headlines here on high-tech. Intel just announced they're investing another $300 million into a research development facility in Chandler. Of course, that's peanuts to Intel, but keep in mind they already pledged $5 billion a couple of years ago to build a new chip plant. We also have more than just high-tech there. We've got US Airways that has a hub, University of Phoenix. We have Arizona State University, the largest university in the entire United States. It's number 1, that's that. Just a lot of people, it's very large. We've got a lot of financial institutions, companies like LifeBlock that are up and coming and doing better. And when I mention like Wells Fargo, Bank of America, I'm not talking about branches, large call centers, things like that, that they actually employ a substantial amount of people, not just in their retail facilities. I have always mentioned this in my presentations here, but I've taken it to the back of the presentation this time. And it just basically speaks of cost of living. And I compare it to the Bay Area because it's very fitting since we're here. Short and long, what this chart or what this information says is if you take, let's say, someone who is a chef in the Bay Area and you move them to Phoenix, they're going to make about 20% less doing the same exact job. However, they're going to end up with 20% more money in their pocket. That's because the cost of living is 41% less. So effectively, there will be a much more disposable income for that family right there. And so your dollar just simply gets you farther. So as I mentioned in the top of the presentation, some of the services that we provide are really end-to-end services. We don't only help with the brokerage, but we also handle the property management and the property maintenance as well. This keeps us honest, if you will. I give conservative estimates when I estimate rents because our relationship doesn't end after the sale, and it's not as if I can just point the finger at the property manager because I would be pointing it back at myself. We also provide in-house maintenance for those clients that desire it. That truly helps benefit and affect a more efficient way to manage a property. We basically service the entire Phoenix area, so anywhere you're interested, north, south, east, west, we can definitely be of help to you. I do have some deals here, but I'm not going to go through them. If you're interested, if you've liked what you've seen, come and speak with me. Again, this is a very tough market to find product, and I've brought product with me. I have a portfolio of 5 homes that are already occupied, that are ready to go. I have a 4-plex that's already occupied, that's built in '94, that's ready to go as well. So I'm not going to bore you with the details here. If you like what you see with the Phoenix market, then please come and see me outside, and I'd love to chat with you in further detail. Thank you very much for your time, and have a great day.